Well, Jagender Rana here. Topic of the day is life insurance policy holders are set to get a higher surrender value refund. Life insurance policy holders are set to get a higher surrender value refund. Life insurance policy holders will now get a higher refund if they discontinue their policies in the wake of the new rules mandated by the Insurance Regulatory and Development Authority of India from October 1st. Now, every policy offered by life insurance under a non-linked platform which is required surrender value should not lapse by reason of non-payment of further premiums. It should be kept in force to the extent of paid up sum assured, calculated by means of formula as approved by the authority, and the reversionary bonus or the guaranteed additions, if any, that have already been attached to the policy. This means policyholders will get a higher refund amount of discontinued policies as per the new calculation approved by the regulator. So the surrender value is the amount which the policyholders get if he stops paying premiums. So the insurance companies were paying only a small amount as surrender value toward discontinued policies. So product and commission structures are likely witness significant changes, leading to volatile premium movements in the second half of the current fiscal. However, as these changes are anticipated to be favorable for customers, the growth is likely to rise over the medium term, rating firms said. So as of now, the policyholders don't issue any refund amount if the policy is discontinued or left for non-payment of premium after 1 year. Now they will get almost 80 to 85% of premium paid after 1 year. So if the policyholder has paid a monthly premium of rupees 20,000 or rupees 2,40,000 for 1 year, he or she will get slightly over rupees 2 lakh as surrender value. Till now it was zero refund for 1 year. So after the customer pays premium of rupees 20,000 per month for 2 years, he or she will get over rupees 4.50 lakh as against premium paid of rupees 4.80 lakh. So as per the existing formula, policyholders get only around 2.5 lakh for discontinued policies. So the surrender value will increase for subsequent years accordingly, and policyholders will get as much as 85% of the premium paid. Furthermore, the policyholders can switch the insurers, making portability easier without losing much money. So the higher surrender value is likely to result in a spike in premiums by insurers. Some insurers have taken up hike in surrender value to IRDI asking the regulator to review the decisions. So insurance funds are supposed to be long terms, fund lasting for 20 to 25 years. If the insurers sell out higher surrender value, it could impact its margins and profitability. So insurance companies also say that high surrender value is against the interest of policyholders who are sticking to the policies. They fear a jump in their profit margins and expenses. There is a possibility that insurers will jack up premiums to account for the rise in surrender value. So the new rule will force insurers to perform well and avoid surrenders. Life insurance premium collections may see volatility in the second half of the current fiscal due to the implementation of a new surrender value guidelines on life policies beginning next month, or it has begun already. So the RDI has announced new regulations regarding surrender values to be implemented from October 1st. So the guidelines has already come into force from October 1st, 2024. The product and commission structure could likely witness significant changes, leading to volatile premium movements in the second half of the current fiscal. An insurance surrender refers to a policyholder terminating their policy before maturity. So the amount payable to the policyholder upon termination is called the surrender value. So after extensive deliberations, the IRDI issued to its financial surrender value guidelines in June 2024, proposing higher surrender value for policyholders. So presently, policyholders can only surrender their policies after paying premiums for 2 full years. However, the new guidelines mandate insurers to calculate a special surrender value after the completion of just one policy year. This means policyholders will receive some surrender value even if they exit after 1 year, provided they have paid the full year's premium. So the new guidelines also raise the surrender value to 70 to 75% of the premium, up from the current 30% across different product and tenures. In its quarter first FY25 earnings, call HDFC Life projected a gross impact of around 100 basis points on its new business premium margin due to the higher surrender value, whereas SBI Life expects minimum impact much lower than 1% due to its product mix and conservative assumptions on surrenders. So Max Financials estimated a 100 to 200 basis point impact on its value of new business. It plans to distribute this impact among customers, distributors and shareholders. So premium growth is likely to pick up in the medium term as the new surrender values are expected to be more favorable for customers. Meanwhile, the NBP of life insurance grew 21% year on year to rupees 1.54 lakh crore in the April-August period. This NBP is new business premium. So Life Insurance Corporation alone accounted for 62% of the total NBP at rupees 95,181 crore during the first 5 months of the fiscal. So the life insurance industry will sustain a growth rate of approximately 11 to 13% over the next 3 to 5 years. After many a delaying and revision spanning close to 3 years, the new surrender value norms by regulator IRDI, which have made effective from April 1st, and they will significantly alter the life insurance landscape. Because the new norms mandate life insurers to pay back higher amount to a policyholder who chooses to switch or surrender her policy. This goes a long way to protect customers' interests and make insurers become more professional, and also contain mis-selling, one of the biggest pains plaguing the insurance sector. For the uninitiated to the life insurance lexicon, the surrender value is the money a policyholder receives if she terminates her policy before maturity. That is usually the cash value of the policy minus any surrender by fees or penalties. The new norms will also help a life insurance policyholder in many more ways, including higher early exit payouts with higher surrender value, easier portability, lesser deductions and penalties, and fewer chances of mis-selling, as the agent may lose money if the policyholder stops paying early and the customers, if not made the king, yet is assured of getting a fair treatment. So the Insurance Regulatory and Development Authority of India released new regulations on the surrender value of life policies in June 2024. So with effective implementation from October 1st, the initial draft was out in December 2022, which proposed a higher surrender value but underwent many revisions. Regulator says every policy offered by a life insurer under a non-linked platform and has acquired a surrender value should not lapse for non-payment of further premium. It should be kept in force to the extent of the paid up sum assured, calculated by
And then just
means of
after you apply, just start to call. Just silence unknown callers, chef. Unknown calls जब करें bother. Activate silence unknown callers. Message privately with multiple layers of protection.
calculated
WhatsApp.
by sum of calculated by means of formula. It is approved, and the reversionary bonuses or the guaranteed additions, if any, already attached to the policy. So this means policyholders will get a higher refund on discontinuation under the new calculation method even after paying just a 1-year premium. So before this, no surrender value was applicable to policies in the first 2 years of surrender or cancellation. And even from the third year, the payback was very nominal and was arbitrarily given. Now on, for the discontinued or left for non-payment of premium or ported out policy after 1 year, you will get as much as 80 to 85% of premium paid. For instance, if you paid a monthly premium of rupees 10,000, say rupees 1,20,000 for a year, you will get slightly over rupees 1 lakh as surrender value. Till now, there was zero refund for 1 year. So the new norms have set some specific valuation methodologies for surrender. The following are the key benefits for a policyholder now. A policyholder is legally eligible to receive a higher portion of her premium back if she surrenders the policy after the first year. For example, if your policy monthly premium is 20,000, you can receive 80 to 85% of the premium paid after 1 year. Earlier, you were not eligible for a single penny. So the IRDAI Master Circular states the special surrender value calculated shall become payable after completion of the first policy year, provided 1 full year premium has been received. For the new norms also say the insurer must ensure that special surrender value is at least equal to the expected present value of the paid up sum assured on all contingencies, paid up further benefits and accrued vested benefits, accounting for any survival benefits already paid. So not just that, there is also a specified rate of interest to be charged as part of the calculations, which states that the interest rate cannot exceed prevailing yield on 10-year GSECs plus a 50 BPS spread. So earlier, after 2 years, the policyholder was only entitled to an unspecified guaranteed surrender value. Then fewer chances of mis-selling. One of the biggest benefits for customers, apart from getting higher value back, is the fear of becoming a victim of mis-selling. So the new regulations leave both insurers as well as agents fewer chances of mis-selling, or rather no incentives to wrap an average returning policy as a high return one, as they may lose money if the policyholder stops paying premium early.
And then just after you apply, just start to call. Just silence unknown callers, chef. Unknown calls जब करें bother. Activate silence unknown callers. Message privately with multiple layers of protection. WhatsApp. And then
Thank you. Sorry for disturbance.